Hey everyone! Today we're going to talk about the 8 assets that have the potential to make people rich. These assets are not only valuable in themselves, but they also have the power to generate wealth and financial security over time. Various assets can help individuals achieve this level of financial freedom. Stick to the end of the video. We have a bonus tip for you. Let's get into it without wasting time. Number 8. Real estate. Diving into the world of real estate investment opens up a realm of possibilities for building wealth and securing a consistent stream of passive income. Real estate has long been a cornerstone of wealth building. Rental properties, in particular, can provide a steady stream of income that covers the mortgage and leaves a bit extra money in your pocket. The key is to invest in properties in high-demand areas where you can charge competitive rents. Over time, as you pay down the mortgage, your equity grows, and so does your income potential. Number 7. Stocks. Investing in the stock market offers the potential for both long-term capital growth and the power compounding of gains. While the market can be volatile, a well-diversified portfolio of stocks can provide handsome returns over the long run. Wealth can be built over the long term in the stock market through either an investing system or a stock trading system with an edge through the power of compounding capital gains. This is best done in a tax-deferred account to avoid taxes eating away at capital growth. Number 6. Business ownership. Owning a business can be one of the most rewarding ways to build wealth. Not only do you have the potential for income from the business operations, but you also stand to gain from the appreciation of the business as an asset. Whether it's a brick-and-mortar store or an online venture, the key is to build a business model that can operate successfully without your day-to-day involvement, thereby generating passive income. Number 5. Intellectual property. Intellectual property, including patents, copyrights, and trademarks, can be a goldmine for passive income. Once you've created a valuable intellectual asset, you can license it to others and earn royalties. This can be a book, software, or even a catchy jingle. The key is to create something unique and valuable, protect it legally, and then license it out. This asset can generate revenue without requiring active involvement. Number 4. Private equity. Investing in private companies can offer high returns, often higher than those from publicly traded stocks or bonds. However, the risk is also higher, and the investment is usually illiquid. Private equity can range from venture capital investments in startups to buyouts of established companies. Due diligence is crucial here, as the success of the investment often hinges on the management and business model of the company. You also must be an accredited investor to invest in most private equity opportunities. Only accredited investors can invest in private market vehicles such as venture capital, private equity, and hedge funds. Unlike publicly traded stocks and bonds, private investments are not registered with the Securities and Exchange Commission. Number 3. Dividend stocks. Dividend stocks are company shares that return a portion of their earnings to shareholders as dividends. These dividends can be reinvested to buy more shares or taken as regular income. Reinvested dividends can harness the power of compounding to build wealth. They can be a great source of steady income, and many investors use dividends to supplement their retirement income. Companies with a history of paying dividends are often more stable and less volatile than those without, making them a good option for risk-averse investors. Number 2. Bonds. Bonds are generally considered less risky than stocks and offer regular interest payments. They can be a good option for those who are looking for a more stable form of income. Government and corporate bonds are the most common types, each with a risk and reward profile. Bonds can counterbalance the more volatile elements in your investment portfolio. Compound interest can grow exponentially over time where your money makes money. At the top, cash flowing assets. Cash flowing assets are the epitome of passive income. These assets require little effort to maintain and generate a steady income stream. Examples include vending machines, laundromats, self-serve car washes, or websites with ad revenue. The key is to find assets that have a high ratio of income to maintenance costs, ensuring a positive cash flow. Here is the bonus tip. By diversifying investments across these various assets, individuals can create multiple streams of passive income, reducing their reliance on traditional employment. However, it is important to conduct thorough research and seek professional advice before investing in these assets. Achieving lasting financial freedom, where the need to work becomes a choice rather than a necessity, is within reach through strategic investments in a diverse array of assets: real estate, stocks, bonds, business ownership, intellectual property, peer-to-peer lending, royalties, and dividend-paying life insurance policies are the foundation for this transformative journey. Careful evaluation of each asset class, coupled with a commitment to diversification, is key to mitigating risks and maximizing returns. From tangible investments like real estate to the intangible value of intellectual property, each asset contributes to the creation of a resilient financial portfolio. With the right strategies and a disciplined approach, individuals can navigate the path to financial independence, unlocking the potential for a life of abundance and choice. This deliberate allocation of resources across varied investments not only cultivates multiple income streams, but also paves the way for a self-sufficient financial future. Thanks for watching.